And namaskar to all, and welcome to this second in series regarding this income tax rules 2026. And as very well explained by Mr. Mahendra Kakule regarding the whole scenario, what the valuers are going through, and it's a ready-made course of account what he has narrated. A few things only. Well, we have been studying, we have been discussing, we have been seeing day-to-day basis what are the developments. But if we look at last when we held the first meeting and during the past this period, we see that nothing much has progressed as far as the income tax department is concerned or anything else is concerned. But I would like to remind this audience or the panelists and all that there are few other developments which has happened under the IBB context. One is that IBBA has come up with certain notifications regarding the adoption of standards, that is IVS, and then they are soon going to put up the standardized format for the valuation. And that is specific regarding the IBC. There are certain amendments in the IBC, and accordingly, the valuers has been upgrade. Previously, they were under the category of utilities. Now they will come under the service as service provider. But the most important of this, the amendments, what has recently come up is the amendment in the corporate laws, that is 2013 Companies Act. So under that, there are other amendments, but as far as the valuation is concerned, under at that time, Section 247, now they have defined IBBA as the valuation authority, and accordingly the rules thereupon. And there are other things which we are not going to discuss here, like the penalty clause and all that. But one thing which is getting clear is that government is has started recognizing valuation as a credible profession, and as we progress and as we take into account all these income tax rules, banking sector, and all these, if when, the parliament has already approved that amendment, but it has to be it is under the consideration of joint parliamentary committee, and once they table their report, maybe in the next session or so, it will see the light of the day, and then the IBBI would be the valuation authority, uh, s- uh, and in all probabilities notified by the central government. Now, if that comes, then all the rules and everything is being assessed. And if you look at the income tax rules which were notified on 1st of April 2026, but till now nothing has moved forward. Like they had said that for the notification of the valuation examination in valuation, it will be notified. But till now there is no notification and no such report as such. Apparently, they may be doing whatever they may be thinking, but uh, it may be in the context of IBBI becoming the valuation authority, because those things are going to be ultimately aligned. And one more thing which has surfaced very recently, and I think most of us may have got one letter from the Joint Secretary, or rather the reply from the Joint Secretary. Do we have that? Can we? I'm just displaying, I'm asking that to display that reply, wherein the Joint Secretary, we can, and everybody can read it. It's in the public domain now. So this is like somebody has written with the Prime Minister's office. इसको छोटा करना है नहीं अब ठीक है हाँ. So the intent of the policies is that the Income Tax Act and related rules are subject to changes and are technical in nature. Therefore, it is important for valuers to regularly update their knowledge and skill sets as per the changing requirements. Keeping this in view, a common examination and periodic review have been proposed. Now, further, a combined reading of Section 514 and Rule 247 indicates that the eligibility conditions specified in Rule 247 are meant to be fulfilled by an individual. Accordingly, the argument that partnership firms, HFU, whatsoever bodies corporate should not be allowed to register as values is not supported under the current provisions of Rule 247. So this is the grievance in Form 16. They are saying that that will be reviewed and addressed after due diligence. इसमें नीचे कुछ है. So if you look at it, so this is released on 7/4/26. Now, in view of this, that means the government is thinking of bringing this very soon, whenever possible, the notification and examination. But seeing that already company rules states an examination in valuation and valuation, IBBI becoming the valuation authority, and the other acts or other authorities, they may have to align with the IBBI as far as the valuation profession is concerned. So still it is an ambiguous, we are in ambiguous statement. But if I look at form number 169 or so, 169, even 169, we see that there are a lot of lacunas that can be seen. Just a moment. In that, it is very clear that this the number and identification number as of who has registered, this is there, but that is 85, 169. So there are some mismatches, and they have already said that it is being reviewed. So that may be one of the reasons that till now they have not updated, or they have not started the process of registration as far as the 169 form number 169 specifically for the purpose of registration as such. A few things as such rumors go on, and there are so many talks, and of course people are they have their own apprehensions, and nobody can deny that they have wrong apprehensions or right apprehensions. We should not go into those merits of their apprehensions, but a few things what I observed, and as an institution, we ought to uh, come to the people regarding that in such circumstances, our caution or our advice is to be patient for some time and don't hush up. Don't hush up. And there's no point of hushing up also, since you don't have the forms. What we have heard is that people are approaching the local offices of this income tax department and asking them, putting up the applications there. They may be paying something to them for their acceptance as registration. But our view is that whether it will be authentic or not, nobody can be sure. One thing is there, that once they have said that valuers who are registered under Section 34AB, they are being taken as it is, as per their rules only. So there need not to be in any sort of panic regarding that, because ultimately Form 169 has not been placed in order. Second point I would like to discuss, and I would like to caution also, that we are hearing from various sources where some people are asking the members and the valuers that join the classes. They have started their classes for the training purposes of this income tax and whatever the examinations I have. I don't know, I may be wrong or right. I'm not saying that, and I don't find them wrong. But in the absence of any sort of syllabus, in the absence of any sort of directions or the curriculum or the notification, how can we proceed with the training part of it? Institution of play valuers will never like to play with these emotions of our members, which is genuine emotions, and I won't say ki, they are like misplaced, but we would not like to misguide our members, and we would like to caution them. Please don't spend your hard-earned money on uh, any such information which is not relevant as of now. We will, during the course of this today's program, we are here to discuss, as was required or as was promised in our previous program, in this series number one. And doctors, advocates, Prakash Sinha ji was very apt, had been giving very aptly legal advices. And that day also I said, listen to him carefully, because what he would be telling you is not regarding valuation, but about the validity or the legality of this act, and how this legality of this act will further your in valuation profession. Because once you come to take on this under the income tax act, we are just talking about income tax act. If the valuation comes, then how you can value, or what are the rules, or what are the different rules or acts that will come into play while valuing any property or valuing any asset. That is his purpose. That is his try, that you should understand first the rules wherever the valuation is applicable. He is not discussing about any irrelevant law or any irrelevant rule, but rather the objectivity, with the objectivity, that how the valuation is required, and how a valuer has to do it subjectively. So that was his purpose. So I would request all to listen to him carefully regarding that. And of course, our Nitin Leleji is going to, well, we are sorry that we are not putting up Dr. Nitin Lele. Mr. Nitin Lele is still being written. So I apologize, sir. We'll soon correct it. And so, and I think all of us need to congratulate him becoming doctor. And like Kakule ji has already, initiated this discussion, and Dr. Patel, who is a vice president of Institution of Valuers, and chairing number of our eminent prominent committees like disciplinary action committee and the bylaws committee. So he has his own views in terms of his experience and qualifications he has. And Mahendra Kakuleji, our learned and eminent council member, and a long standing with the IOV and IOV RVF. So he knows the nitty-gritties of all those things. So with this, I would beg your pardon, and I've explained my view. And please be cautious about any such eventuality which may lead you to unnecessarily troubles and gain nothing. So value your money. I can only say that value your money. So with this, I thank all our panelists, our audience, our participants, to wishing them a very good insight and very good deliberation on the subject matter. And maybe we may have some direction to go forward. But again, I caution, please don't be misled by anything unwritten, rumors, or anything else which is not in black and white. There are so many things going around me. I can only say this because I know what is what. So that is why I'm sharing this, my thought. So thank you very much. Thank you all. Thank you.
Thank you, Vinayji. To recap what Mr. Dr. Vinay Goel just now said, that things are still in a state of flux. Things are changing. There is some still, still clarity is required on some matters. We have to be a bit patient and wait for a while. It is my thinking that probably government at the moment is seized with the task of looking into the matters which are of immediate importance to the government, as far as uh, forms and other things which are needed to for people to, or the platforms which are online platforms which are needed by the people, the SSCs, to file their returns and pay money and all those things. So after that is settled, I think the government will come down to the Form 169, which we do not know whether it will be online or whether it will be offline. It from the way it has been put up, looks like it has to be online. But we'll have to wait for it. Again, the syllabus has to be notified. The authority who is supposed to conduct this examination has to be notified, and whether there will be a role of RVOs also, goes under IBBI or other RBOs, we don't know, who can train the valuers and then look after the continuous education programs. What is the thinking of government on this part as far as Income Tax Act is concerned? These are the things which are still, in the state of flux, and we would want to have more light on that. What government thinks on that. So we'll have to just bide our time for a while. Be patient. In the meantime, I would welcome our very own Mr. C.A. Prakash Sinha, who is not only a chartered accountant but also a very eminent advocate, and with a profound and in-depth knowledge of the Income Tax Act. So he, as I have already said before, he will speak on the various queries which have been raised by the members of our IOB and IOB-RBF during the last webinar program, which queries he will now address. I would also want him to, talk in brief about the transition from 34AB to the new 514 registration. Also, if he finds time, because he has been allotted half an hour, he can briefly broach on various sections of Income Tax Act, especially capital gains and 50C from the previous regime, 56 to 10, and what are those provisions under the new act. So Rule 11UA of the old rules, what is that new rule, and how the valuers will be affected under this new regime, the positives as well as the negatives. So with this small brief introduction, I welcome Advocate and CA, Mr. Prakash Sinha. Sir, the stage is yours.
Thank you, sir, for giving me an opportunity. Respected Dr. Vinay Goel, sir, respected Dr. R.K. Patel, sir, respected Dr. Nitin Lele, sir. I'm the only advocate amongst all the doctors here. So when we are amongst the doctor and the advocate is there, and that also a chartered accountant who practices as an advocate. I have to very, very cautious here that whatever we will be speaking here, there are person around me for the dissecting all these issues here. There are many issues which are related to the registered valuer here. However, thanks to the institution here, I have got some uh, questions here, which I would like to directly come to the questions here. Before I come to the issues here, or through the questions, I will discuss all the issues here. Kindly allow me to share my PPT here for the purpose of questions here. Whether my PPT is visible? Sir, my PPT is visible, sir?
Yes, sir, very much visible.
Great, sir. Great, sir. Just give me a few seconds, sir. Yes. I'm directly coming to the question which I have received from the Institute of Valuer here. First question is that, can you please explain the concept of book value in simple terms here? Under the income tax, nothing is called simple, but I will like to make it as simple here. The term value itself has very wide connotation here. And particularly, the Income Tax Act uses different terms here. It does not only use the value. Sometimes it uses the value. Sometimes it uses the book value. Sometimes it is used by the net book value. Sometimes it is a annual value. Sometimes it is a stamp duty value. Sometimes it is a fair market value. Sometimes it is a associated enterprises value here. So please be clear here what we are going to determine here, whether we are going to determine the value or whether we are going to determine the annual value or the fair market value. Because why these are the terms here? Because the term fair market value is under the statute which has been defined. The annual value has also been defined, but the value has not been defined under the law. For the purpose of valuation, they refers to the delegated legislation. What is the rule is there here? For the purpose of please be cautious. I will be discussing about the Rule 57, which is the subject matter of our discussion. This Rule 57 is on the issue of the fair market value and the value, and particularly on the basis of the fair market value. So I will come to the issue to discuss what is the fair market value and how to understand that part here. So please be cautious here. Where the law uses different terminology. What is the book value, where net market value, market value. So the term book value is a term which is appearing in the book here, as on the date that you are seeing any balance sheet here or any books of accounts here, balance sheet, particularly in the balance sheet, if that is an inventory, if that is an asset, if there is a plant and building. So we have to see that what is the value that is that is appearing in the book here. It has nothing to do with the gross value. It is the value which is appearing in the book. Like if the asset is there, then the asset minus accumulated depreciation qua that asset, that will be treated as the book value for the purpose of our understanding here. There are many terms, particularly the book value has been used in different provisions here, like Section 9, Section 77. There are different terminology that has been used. I will come to that part here separately here. Now coming to the another question which is there, directly Section 50, Rule 57, which is very interesting to know what is the Rule 56, 57 talks about. Earlier, we had rule 11U, 11UA, and 11UA. What Sir has already spoken, Mahendra has already has spoken about. There are different rule was there. But now this rule has been, whether it has been simplicity renumbered or there is something has been done into this rule here. I will say that there is a great dichotomy in this rule. Why I will say the great dichotomy in this rule here? For the purpose of, we have two rules here, 56, 57. 56 also defines the registered valuer. If someone has, you can check it here. They also define the merchant banker. And they says that for the purpose of this rule 56 and rule 57, registered valuer are those registered valuer which is covered under section 514 of the Income Tax Act. But when we come to section rule 57, they have said that these are the asset or these are the property which has to be defined, which has to be valued. But they does not tell who will value it, who will value this one. There is no criteria under the rule 57 saying that yes, this is the valuation of the inventory, this is the valuation of the jewelry. So for this purpose, jewelry, he is the valuer, he is the valuation officer. Rule 57 is totally silent on that part here, which will lead to the lot of confusion here. When I can say that earlier 11UA was there was a clear written that who will be doing the valuation under 11U, and like merchant banker was there for the purpose of valuation of the share. Chartered accountant was there for the purpose of valuation of share, particularly those shares where there is a FDI is there, when there is a foreign direct investment is there. So we have the valuation under the this one say FEMA rules here, or we have the discounted cash flow method that was there, and they have said that discounted cash flow method should be done by the merchant banker. They have not said that the discounted cash flow method should be done by the chartered accountant. However, in this rule here, 57, I nowhere find that they have said that who will define who will be the valuation officer qua each of the asset here. Like if you go to the rule 57, we have the first talk about jewelry. Jewelry is coming. Why the jewelry? Because there are three sections. Section 26, which talks about the income from business and profession. If some jewelry is there, how you will value it? Okay. For the purpose of 92, income from other sources. If someone gives a jewelry to other person, how it will be valued? Okay, valuation method has been given. But who is going to do the valuation? It has not been given under the rule 57. So the issue will arises here, how a valuer will go ahead here. Whether there any method which has been prescribed, or particularly whether this rule has been prescribed, which says that if there is a valuer, if there is a jewelry has to be valued, a particular valuer of the jewelry has to do the valuation. I didn't find that part here. However, I'm keeping this question right now in the parking mode. I'm going ahead because there are a lot of issues that is there. So particularly for the purpose of Rule 57, there are three provisions which has to be taken care of the Income Tax Act. Income from the business and profession, which is covered under the 26(2)J. It is the income which is arising from some assets, jewelry, building, plant and machinery, because Rule 57 also discuss about the archaeological quoted. They also discuss unquoted, say immutable property. They also discuss immutable property. And immutable property, they also say how to define the immutable property. And there's a other head here, which remaining head, residual head here, which talks about how this property has to be valued here. Valuation, so jewelry, archaeological rule of valuation is akin to the 11U. I will say not it is akin to the 11U, but 11UA, but they have differed something here. I will come to this part here subsequently. Let's see about the next question. Now, the concept of section 514, what we have discussed here. The third question is that, could you explain the section 514 and its implication for the valuer? Section 514 generally people tell us that it is akin to the earlier section 287 here, 287A, but there's a big change here. How big change is there? I will explain this part here. Kindly give me this one, sir. Let's come to the 287 was there, earlier 287. Earlier 287 was very small section, which was only for the purpose of representation here. And they have said that who will be the registered valuer. They have said the registered valuer will be the valuer as per the Wealth Tax Act, nothing more than that part here. Now here, they are going to discuss about the registration of the valuer. So earlier it was the registration under the Wealth Tax Act. Now the registration is under the Income Tax Act. Very much important. And this new registration has been done here. And who can get the registration? There is also law which say that who will get the registration. Who has to be, there are two parts of the registration in that. First, there should be a qualification criteria, minimum qualification criteria. First part is that. And second part is that once you have qualified for the purpose of getting registered here, you have to pass an examination here, which will be conducted by the central government. So it is not a simplicity saying that whoever is got registered under the valuation section 514, he will become the valuer. There are two steps to become the valuer. One, going into the minimum qualification criteria, you can be a member of the, you can be a registered valuer. However, the registered valuer is subject to qualification passing of the examination conducted by the central government, for which there is no notification till now. No notification has been issued. And more important part is that there is no syllabus has been issued for the purpose of, as Vinay sir has said, that it may go as per the IBBI guidelines. It may go as per the whether it will be MCQ types or whether it will be go a descriptive type. As of now, there is no clarification on this part. But I understand that in the fraternity here, they were saying that it will be go as per the IBBI requirement here. So I have mentioned that part here. The IBBI will be becoming the nodal agency. However, it is just my guess here because nothing has come through the notification here. I have said that yes, who has to get registered with the commissioner here, principal chief commissioner and chief commissioner, and the person who possess some qualification, they will becoming the registered valuer. One leeway they were given that those registered valuer who has a valid registration certificate under the Wealth Tax Act. So very much caution is that the person should have the valid registration certificate under the 514, and if that have the valid registration certificate, they can become the member of the they can get registered under the 514. This is coming from the rule number 246, which we will discuss here. So 514 has three parts, that who will be registering. The principal commissioner will be doing the registering authority. Second part will be the qualification that they have mentioned, that what can be the qualification. Qualification will be coming from the rules. And third part, they have said that they have to give an undertaking. Yes, undertaking is like whatever we are doing right now, impartial and true valuation, furnish the valuation certificate. And after that, rates, they have also prescribed the fees, whatever of the fees that will be there, again through the rules here. And fourth part is that the valuation report will be furnished as per the form number 170 that will be discussed separately here. So these are the section 514 basic section, which gives the right for the purpose of registration of the valuer, and subsequently how the valuation has to be done, particularly how the valuation fees has to be decided here. The fourth question which has been asked to me, kindly clarify the key aspect of the form number 85 here. Although I understand that Lele sir will be discussing about the form number 85 here, but some broad parameters I'm trying to touch upon here. Look, the Form 85 is the requirement under section 247 of the Income Tax Act. It is a very special provision for the search and seizure. This provision talks about that if a person, if a registered valuer or a valuation officer is interested for the purpose of doing the valuation for a item or asset which has been found during the search and seizure part here, then they should apply for the purpose of getting registered with the department here. And for this purpose, form number 85 is there. So form number 85 has some very specific requirement here. Form number 169 has something specific requirement. Both forms are different forms. Both forms has different parameter to be required to be seen here, because under the form number 85, it is not only the registered valuer, any person, any entity, or any other registered value or the valuation officer, all has to be registered. So requirement of the form number 85, read with rule 149, read with 247.5 and 247.9 section are totally different. It is a special provision. Don't mix it with section 514. So the issue is that you may be registered under the 514, but even if you are not registered under the 514, even if you can become the valuer for the purpose of search and seizure, because under the section 247.5 and 247.9 gives a wide power, like a person, an entity, a person. The person may not be necessary a person which is covered under the 514. These are the broad things that I try to find out. We can discuss in detail here. So relevant provision of the search is a specific requirement, search and seizure, and there is a specific requirement under 149 here. Fourth question is that provide the comparison of the new act and the existing one. As I have mentioned, the section 514, as I have earlier mentioned, now it is the 287A of the erstwhile law. What the erstwhile law says here? 287. An SSC who is entitled or required to attend before the income tax authority or appellate tribunal in connection with the matter relating to valuation of asset, otherwise than the required under 131, personally examination with those concerns may attend with the registered valuer. Nothing more than that part. It was the qua attendance before the department. It was never qua the qualification. It was never qua the registration. It was never qua the examination. It was nothing. So it is a totally a paradigm shift here from 287A to section 514. I will not say that 514 is comparable to 287. 287 is totally a different section working on a different parameter. 514 works on a different parameters. It gives a power of registration. So very much important. The income tax department has got the registration authority, which was not there into the erstwhile law. Erstwhile law, you were registered with the wealth tax authority here under section 34AB. So here is totally different law. It gives the parameter to provide the qualification. It was never into this income tax law. It gives the parameter how you will give the undertaking. And fourth, its parameter is for the purpose of examination. So 514 is totally different, a different pedestal than the 287A of the erstwhile law. What happens to the existing Income Tax Act and the ongoing assignment once the new act is implemented? We have the section 536, which talks about the repeal provision. Under 536, whatever the work, whatever the assignment that you have got, that will be validated under the new law also. So please don't get it confused that you have taken the assignment under the old law and now you are doing it here. So whether it will be validated or not, section 536 especially covered this aspect here, repeal provisions here. The seventh question is that the objective of Income Tax Act, IBC, section 34AB of the Wealth Tax Act, the SEBI regulation differ. Can you clarify the distinction? Yes, I can clarify. Look, every law has some different objects and regions here. Every law works on different parameters. The purpose of every law is something different. Like purpose of the Income Tax Act is to tax you on the income here. So the purpose of taxing something is then the consideration. When the something is not been defined or the value cannot be defined, therefore certain parameter has been set to define the value for the purpose of computing the asset of that part here, income of the SSC. So all the purpose of the Income Tax Act is to define is to compute the income of the SSC, and during this process of computation, wherever the valuation has not been done or valuation is required, it has to be valued as per the income tax law. It has nothing to do with the IBC or other law. IBC is totally different law. IBC talks about resolution of the stressed assets here. It is resolution of the company here, where the company is unable to pay the debt and it has become the corporate debtor here. And when it has become the corporate debtor, the RP or the IRP has to do the valuation for the purpose of calling the quotation from the registered resolution applicant here, or for the purpose of liquidation here. So the purpose of IBC is totally different. Purpose of income tax is totally different. Section 34AB. Section 34AB was qua the Wealth Tax Act here. The purpose was again is for different here for the purpose of computing the wealth on a particular day in order to levy the wealth tax. It was never the requirement of the income tax here. SEBI regulation. SEBI regulation also work on a different angle here. The purpose of SEBI is something different. So purpose of the SEBI is to value for the purpose of shares or securities here, in order to see that what are the transaction value or there is no any violation of the SEBI law here. So the purpose of each law is something different. Kindly do not confuse with the all the valuation which is there. Again, there's a valuation under the Companies Act. Registered valuer is there under section 247. There, the purpose is something different here. So please do not get confused with that part here. What is the process of registration under the new framework? Will there be any exams, and what is the expected syllabus here? I feel that I have already discussed this part here, but again, the rule 246 is very clear on this issue, and rule 246 talks about what will be the process here, how we have to go ahead here, and what are the form that has to be there. Form number 169 is there already required here, and as Vinay sir has already mentioned, that till now there is no syllabus has come out. Till now, nobody knows that who is going to take the examination. They have simply said that the central government will take the examination here, but how that examination will be conducted, whether it will be offline or online, because I understand that a registration process will take online process, because it will be coming through the online issue here. But we have to see when these forms get online here, and what are the syllabus that they comes here. Rule 246. Just hold on, sir. So as I mentioned that rule 246, that there will be application as per the form 169 along with the fees of 10,000 rupees. Yes, if we are the registered valuer under the Wealth Tax Act and have a valid registration certificate, please mind this part here. They have said that those persons who are the valid registration certificate, they will also be entitled for the purpose of filing the registration form number 169. However, the 10,000 fees rupees that will not be applicable as per the rule that is coming here. So thus subsection 4 talks, sub-rule 4 talks about where a person is already registered under the Wealth Tax Act holding a valid certificate of registration. So if your certificate of registration has got expired or it is not a valid, then it can create a problem. So please ensure that you have a valid certificate of registration as on 31st March 2026 here. So kindly be careful on that part here. You should have a valid registration certificate as on 31st March 26 here. Coming to that part, next question. What are the eligibility or non-eligibility criteria for becoming the registered valuer? I feel that section 247 that already gives that qua the asset, how the values qualification criteria is attached, and under Rule 247 for the immovable property, there is something qualification criteria for agriculture, land, forest, mines and quarry, stocks, machinery, plant and machinery, jewelry, works of art, life interest, and in case of other cases here, the department can make the qualification criteria. So please be sure that these are the, because when we will apply for the purpose of getting registered at valuation, valuer officer under Form 169, you can see that you have to mention that for which type of asset that you are trying to value here. Which type of, it is not that every type of assets here. If you are valuing for the purpose of plant machinery, you have to tick it here. If you are valuation for the purpose of buildings, then you have to tick it here, saying that yes, you are going to that part here, and then you have to qualify you have to pass you have to meet the qualification criteria of the Rule 247 here. Now the question is that, question number 10, I am a registered valuer under the Wealth Tax Act. What are the criteria and process of migration and re-registration? Kindly see that there is no automatic migration here. You have to apply in the form number 169. Yes, there is no requirement of paying the 10,000 rupees fees, but you have to apply for the purpose of form 169. But the issue becomes here, what we have discussed till now, whether this application will be online or offline. Till now, there is no clarity, but I understand it will be an online application here. When this application will be online, file it there online here with your valid registration certificate under the Wealth Tax Act, so that you can go through the whole registration process here. Can the IBBI registered valuer directly become the registered valuer under the Income Tax Act? Is IBBI registration sufficient? The answer will be absolutely no. The Income Tax Act does not require, or income tax rule, where the qualification criteria has been given, they never say that if you are registered with the IBBI, you are qualified here. Only they give to those persons who are registered with the wealth tax under the wealth tax law as per the 34 AB, which we have this. He says that where a person is already registered as a valuer under the Wealth Tax Act, nothing more than that part here. So those persons who are registered with the Companies Act, those persons who are registered with the IBB Act has no relevance here. Only the leeway has been given to those valuer who are registered with the Wealth Tax Act and having a valid certificate of registration. Very much important, valid certificate of registration. Only those persons. So therefore, don't get confused with the IBBI here. Don't get confused with the SEBI. Don't get confused with the registered valuer under the Companies Act. Fourth question. Is it confirmed that the existing 34 AB of the Wealth Tax Act valuer will not face suspension? What are the safeguards exist here? So I have discussed about what is the valuation officer, and as I mentioned that if you are having a valid registration certificate, therefore once you have a valid registration certificate, nothing to worry. You can very well apply to become a registered valuer as per Rule 246(4), and once you apply to 246(4), just wait for the online applications here. Once you apply, therefore you have not required to pay the fees also. You will be getting registered here. Subsequently, you have to pass the examination. Please be careful. Subsequently, passing of the examination is mandatory for all. There is no exemption from passing of the examination, particularly if you say that since I am a registered valuer under the Wealth Tax law, under the Wealth Tax, so whether I will get a exemption from passing the examination, answer will be no. There is no exemption qua the passing of the examination. There is only exemption is you can very well apply and the department will register you and you are not required to pay the fees of 10,000 rupees again. Fourth, a 13 question. For existing valuer, are all the requirement, forms, document, examination applicable, or there are any exemption? As I mentioned that exemption is qua the fees only. You have to follow the Rule 246 here. If someone has recently obtained wealth tax registration, example in 225, do they still need to apply again? Answer is yes. The law says if you have a valid registration certificate as on 31st March 2026, so if you have any registration certificate prior to 31st March 2026, you are eligible under 246(4) and you can apply for the purpose of getting registered under the new income tax law here. What will happen to the application that are already approved but pending in the final order? Applied recently January but has not been processed. Renewal application pending under the Wealth Tax Act. All answer is lying with 246(6). 246 says that if you have a valid registration certificate, so therefore, particularly the question number 3rd, if your renewal application pending before the Wealth Tax Act, if you have not get it renewed, please get it renewed so that you should have a valid registration certificate as on 31st March 2026. Unless the government says that no, for those cases where the renewal is pending. But as of now, they are saying that as per the rule, they are saying that there must be a valid registration certificate. So please get it registration certificate valid here. There is no provision to mention wealth tax registration number in Form 169. How should this be handled here? I think that my understanding is that it can come into the Part C of the Form 69, particularly row number 7. Row number 7 is there, and particularly sub row 4 that will cover that part here. What is the difference between Form 85 and 169? As I mentioned that Form 85 is for a specific purpose of the search and seizure. Form 169 is for the purpose of getting registered under the valuer under the 514. It may happen that you don't require the registration, you are not registered 514, but you are registered under 85. 247. It may happen that you are registered under the 85, but you may not get registered under the 514. Both are different provisions here. Both act on a different purpose. Only part is that 246 or 247 subsection 247(5) and subsection 9, through which the form number 85 is there, particularly the rule 149 is there, is very specific for the purpose of search and seizure. So you are a assisting person to the income tax authority in case where there is a search and seizure takes place here. What is the difference between Form 85? I think that I have covered. What will be the qualification exam framework and who will be deciding it, given the CBT has left to the central government? As I mentioned, that examination will be conducted by the central government. As of now, there is no notification, preferably as like IBB examination. It is my personal opinion, preferably by the IBB apart here. Question number 19. If a person clears new income tax valuer examination post 2027, will it provide eligibility for the IBBI registration without clearing the IBBI examination? As I mentioned, both laws are separate and independent. Income Tax Act does not recognize the IBBI valuer. The IBBI valuer does not recognize the income tax valuer. So kindly read both law as a separate and independent here. What is the formal education master of why is the formal education master of valuation not being adequately recognized in the eligibility framework? That is a policy issue. That on that issue, I won't be able to comment that part here. Practice this one here. Should valuer continue accepting capital gain assignment during the transition period? Yes, the law does not bar you to take the assignment here. Only thing is that whatever the transition provision is there under the 536, the issue may arise here. The complication may arise here when you furnish a reply or when you furnish a report under the new law. Then the issue will be there. From 1st April 2026, the new Form 170 has come. So you have to furnish the reply under the Form 170. The issue can also come. The complication can also come. Take a case here. You were a wealth tax certified valuer under the erstwhile law. What will happen if when you have to furnish the reply, when you furnish the report, at that time you are not a registered person, because as of now, there is no form right now. So can a person say that, yes, my valuation report is complete. Now I have to file the valuation report. The form number 169 has not been notified, so I'm not able to apply for the purpose of as a new valuer under the new law. And how I will file the form 170. So I think that there should be some clarification on this point here. So if those assignments which you have received, particularly under the erstwhile law, you can file under the in the old form here, rather than waiting for the new law here. I think some circular should come on this point here. Whether will institution like the IBA recognized valuer registered under the new income tax framework? And the answer will be no. There is a IBA Institute, that is the IBA in Indian Bank Association is a separate body which works under the RBI. It has nothing to do with the income tax authority here. So valuation under the qualification criteria under the IBA and passing of the exams under the IBA is totally separate than the passing of the exams under the Income Tax Act. I have also included the Company Act where the registered valuer should be there. Now it is a Q&A. I'm open to the question which I can take here. I think that I am able to complete my assignment within the time. Thank you, sir.
Thank you so much, Mr. Sinha, sir. I think there is already provision for panel discussion at the very end. So rather than taking questions right now, we will just move on to the next panelist. The panelist now is Dr. R.K. Patel. Considering all the discussion which has happened so far, he will try to speak on the topics which are not covered or which he feels that need to talk on more on. So I now request Dr. R.K. Patel to take forward the discussion and please bring forth his insights and his thoughts on the subject. Over to you, R.K.
Thank you, Mahendra, and good afternoon to all. I think Prakash Sinha sir has very nicely explained all the intricacies of the various sections and rules wherein what the valuer is to do. And of course, he has also admitted that there are a lot of ambiguities. Not ambiguities, but there are no further notifications or clarifications regarding examination and all these things. Apart from that, I would like to add something that Income Tax Act and the rules are in place now. Okay, so they are not going to change. Only thing, certain procedures may change. So now we valuers are very much interested in income tax and all these things, because now 34AB is no longer going to be there. And but in the transition period, our valuers will be practicing under the new act. But they will have to pass the examination one or the other day. Okay, this 30th September is the deadline, which may or may not extend. We don't know at this stage, correct? But when I had gone through the Income Tax Act and the rules made thereunder and notified, of course, now, because they are no longer draft, they are notified. So being a valuer, and my valuer friends also would be interested that where our practice lies there, okay, and how we can earn the money out of it. Ultimately, our goal is to excel in the valuation profession, and of course, ultimately, what will be our take home? Okay, so I have just I think briefed out what are the various sections and the rules wherein the valuation lies. Okay, and where our valuers can practice, and then they can excel into the valuation practice in the Income Tax Act, of course. And this Income Tax Act is not simply Income Tax Act, but it is also affecting the various provisions of SEBI, RBI, and valuations there and there. So I think we should not miss these sections, because one or the other day they are going to affect the various other regulations as well. So I'm sharing my just brief I have worked out, so that it will be a ready reference for most of the valuers. They can go into the various means details into the various sections and the rules, and then find out their own scope where they can master all these things, because methodologies and everything will be different in different statute. Similarly, in the income tax also. So let us find out where our scope lies, and then where we should master and we should study properly. So that will be helpful in our defining the course for the valuers, and then how depth one has to go into the various valuations of various assets and methodologies there. Okay, because valuation standards may or may not apply. Okay, but they will apply in certain cases where we have to work out the fair market value. Where there is a question of stamp duty, we all know that stamp duty is non-scientific way of doing the valuation, and it is just for sake of collecting the stamp duty, and then income tax is taking the reference thereof. Okay, but later stage, income tax may also realize that the valuation should not be based on stamp duty, but it could help to the exchequers when the valuation is done on FMB, and that should be reasonable. But that later on, our Prakash will also agree that later litigations may define all these things. Okay, so before waiting, means we cannot wait till then, but we can master, of course, what has been notified under the Income Tax Act and the rules. So I am sharing my presentation here. So, are my slides visible? Hello? Yes.
Yes, sir,
Okay.
they are.
Yes, fantastic. Now see, these are the various sections and various rules I have corroborated. So, and there are certain sections, certain rules may not be following. Okay, so only Act may be speaking about the valuation. Section of the Act may be speaking about the valuation, and in certain cases, only rules will be speaking about the valuation, and section is silent on that. So, first, section number 21(1) of the Income Tax Act 2021. When I say section, then it refers to the Act, and when I say the rule number, then it refers to the rule, income tax rules. Okay. So, section 21(1) refers about the income from house property. Their valuation lies, and then here in the rules, nothing has been mentioned on that. So, purpose of valuation is the immovable property, income from house property. So annual value is to be worked out. And what is the basis of valuation? Valuation is higher of reasonable letting value, that is the market rent, or the actual rent received. Okay. So market rent, sometimes we do not get the evidences. Okay. Or some transactions we may not get. I think this is where the valuer's art lies, how to determine the rental value. Okay. So I think this is where our expertise lies. Coming to the second section, that is this section 26(2)(j), wherein profit and gains of the business or profession. There, the fair market value of the inventory as on date of which it is converted into or treated as a capital asset, determined in the manner as may be prescribed. I think this is the inventory is not that inventory which is raw material or finished goods. Here, the inventory is of capital nature. So, capital work in progress, when it is capitalized, then it becomes a capital asset. So, and then corresponding rule is rule number 57. Then description of the rule, what the rule describes: immovable property being land and building or both, the value adopted or assets as accessible by any authority of the central government or the state government for the purpose of payment of stamp duty in respect of such immovable property on the valuation date. Okay. So here it is that there is no other way but just to find out the stamp duty value. So purpose of valuation is conversion of inventory into capital assets. When inventory is converted into capital asset, then stamp duty comes into the picture, and then value adopted by any of the authorities. So this is where it is, but I will also find out where the scope is there. I will show you at the end where our valuers can play the role. 27 section 26 2J and the corresponding rule 57, that is table given. There are various properties, that is jewelries and then archaeological assets, or that art assets, or land immovable properties, and then other assets. They say other assets. So when they say other assets, particularly it fingers to the plant and machinery, because plant and machinery is not defined in the whole table, but in the table serial number 7, it said other assets. So we have to understand that plant and machinery is there. Okay. So description any other property, here it means plant and machinery, because we all are some of the valuers are plant and machinery valuers. So they say that no, there is nothing specifically mentioned about the plant and machinery. The word is not there in the Income Tax Act and rules, but other assets other than what has been defined in the serial 1 to 6 is the plant and machinery. So purpose is the conversion of inventory into capital assets. When plant and machinery capital work in progress is converted into capital assets, I think in that case, the open market price. So plant and machinery value has a valuer has a very wide scope to find out the price ordinarily pledged into market open market on the valuation date. So fair market value is to be because there is no stamp duty. Okay, stamp duty notification on or government has no mechanism to find out the stamp duty value of the plant and machinery. So I think plant and machinery valuer have to very nice scope for income tax. Okay. Now coming to the section 6710, that is for the capital gain and corresponding rule 50/8, that is revaluation of capital assets or the valuation of self-generated assets or self-generated goodwill. I think these are the tangible assets and intangible assets both combined here. Okay. So self-generated assets means fabricated assets or the constructed buildings or some kinds of specialized assets. I think they fall under that. So this is immovable property and plant and machinery. That is the reconstitution of the specified entity, attributing to the income to the assets remaining with the entity. Okay, I think this is where the self-generating generated assets, because they are not available in the open market. So here the fair market value concept comes into, and then the increase in the value due to revaluation or the valuation of self-generated assets, that is treated as an income. And then I think this valuation is a very good scope for the valuers. Coming to section number 77 /3/B, that is the capital gain in case of slump sale, fair market value of capital assets as on date of transfer. Okay, I think stamp duty is the stamp. What is the stamp sale? That is the slump sale. Slump sale is the sale of assets along with its liabilities. Okay. So not only assets are sold, but the buyer has to take the liabilities as well along with that. So sometimes considerations are different than the fair market value and then stamp duty value. So in that case, fair valuation to be worked out. Method of determination of fair market value of the capital assets transferred by way of slump sale. Immovable property slump sale, that is the book value based, and the stamp duty value adopted by this. I think this is where the fair market value is to be worked out and compared with the stamp duty valuation. I will come to the later stage where the valuer has the scope. Coming to section 77(3)(B), transfer by of slump sale. Again, it is related to the immovable property and consideration received or accruing by way of slump sale. Now, sometimes the consideration is not in only cash, but it is accrued, because accrued in the sense it is not yet realized. So in that case also valuation comes into picture. Section 77(3)(B) again, that is transfer by way of slump sale. That is again rule number 53. Method what this is related to the plant and machinery valuation. So plant and machinery, that is again the open market price and price fetch. So here the plant and machinery valuer has a great scope to work out compared to the immovable property valuers. Of course, immovable properties have valuers have a large volume, and where they can play the role, I will tell at the end. Section 78(2), reference to valuation officer where SSE claims that the stamp duty value exceeds FMV. I think this is where the reference goes to So here the client may ask you to get the fair value done, whereas the income valuation officer has considered only stamp duty. So when the stamp duty valuation is higher than the FMV, I think you can refer to the appellate authority and the valuer can appear for that on behalf of the client. So immovable property, full value of consideration for capital gain, and stamp duty valuation deemed full value if it is greater than 100% of the 110% of the fair market value. Coming to section 80, FMV deemed to be full value for consideration. It refers about the plant and machinery and immovable transfer where consideration is not ascertainable. Now, in certain cases, the transfer consideration is not ascertainable. So even stamp duty is not defined therein. Okay, in that case, fair market value is to be worked out for both immovable property and plant and machinery. Coming to section 90, cost of acquisition. I think when there is a cost of acquisition, there is a similar principle as per section 80. And then here there are no rules now. You can see that there are no corresponding rules. Coming to section 91, that is cost of improvement. I think cost of improvement is also sometimes not coming into the stamp duty purview. So in that case, fair market value is to be worked out. Section 92, income from other sources. I think rule number 57, table 6. Table 6, again, same that various properties have been defined. That is serial number 6 says about the immovable property, land value adopted by the assessor. I think stamp duty valuation is to be 1. And then again, one has to compare the FMV with the stamp duty. If stamp duty is higher than the real fair market value, he can go to the appellate authority and then represent himself that the income considered by the assessing officer is higher than what it should have been. Section 92, again, income from other sources. Similarly, it applies to plant and machinery. Whenever there is a plant and machinery valuation, naturally open market price is to be worked out. That is FMV. Then section 165, rule number 79, international or specified transaction that comes to the transfer pricing. Transfer pricing is the asset transferring of the assets of one entity to his associate entity abroad. So in that case, arm's length price is to be worked out. There are various methods therein. And then there is also transfer pricing theory and then various methods. I think this is a very great scope for the plant and machinery valuers or inventory valuers who have their transfer pricing question comes where there is a transaction between associated entities cross-border. So I think this is a very good scope for that valuers. 220 section 228(10), that is plant or ship services, that is tonnage tax. So for that purpose, market value is to be determined and then price ordinarily passed in the open market. I think this is also a very good scope for the valuers. 247, section 247, that is immovable property, valuation of seized assets. But during search and seizure, I think Nitin Lele is expertising on search and seizure. So he will talk about, but when there is a immovable property is seized, then stamp duty valuation comes into picture. And I think if you go to the various acts or special acts of seizure of illegal properties or enemy properties, I think the government is insisting on the stamp duty value plus any cost incurred for that. Section 247(9), again, rule number, sub-rule number, rule number 150, sub-rule 13, where plant and machinery valuation, when there is in search and seizure, in that case, open market. So whenever there is a plant and machinery, there is no question of stamp duty or any comparable transactions. So you have to work out the fair market value. So section 268, that is the inventory valuation. Now inventory valuation as per the income tax computation disclosure standards. I think this valuation is assigned to the cost accountants, okay, cost accountants. But as one circular was said by the one reply by the joint secretary shown by Dr. Vinay Goel, it says that these are not the binding, these rules are subject to change. So tomorrow some inventories are that kind, they may amend and say that it is not only in the purview of cost accountant, but the plant and machinery inventory may be valued by the plant and machinery valuer, and the immovable property like or real estate inventories can be valued by the land building valuers. So similarly, section 277, inventory, that is the lower of the as per the income tax computation disclosure, that is the FMV valuation, again plant and machinery inventory actual cost or the net realizable value. This is where the inventory is to be worked out. I think this is where plant and machinery inventory or immovable property is there. I don't think that cost accountants may be competent to work on it. So in that case, I think if references are made, in that case, they may consider that, okay, inventory of immovable property or inventory of plant and machinery should be valued by the respective asset class valuer. Section 352 and corresponding rule 189, immovable property accrued income. Accrued income, that is the when there is an accrued income for the in that case open private market, higher of the open market makes open market price, or the stamp duty is to be worked out. I think when there is an accrued income to be accounted into the income of the SSE, in that case I think valuer report is must, and this is where the scope of valuer lies. Similar plant and machinery, exit value, again open market price. Okay. Now coming to where the valuers have the scope. Wherever it is not mentioned that or it is mentioned that the only stamp duty valuation will be considered, I think we can represent the client, do the valuation of FMV, fair market value, which is lower than the stamp duty. In that case, income considered of the SSE is higher and he is liable to pay higher income tax. In that case, I think fair market value can be worked out by the valuer and he can appear on behalf of the client before the appellate authority. I think this is where the another scope lies. I think we all valuers must expertise on this appearance before the appellate authority with mastering the methodologies and the valuation standards or procedures adopted. And why stamp duty should not be considered for considering it the income, and then stamp duty, it will be prejudice to the SSE. I think we can appear as an advocate before the appellate authority. This is what I wanted to say, and this is very great scope for the valuers. Up till now, we have been understanding that 34B registration is only for capital gain, and bankers are the great users. But I think here all the stakeholders are the great users, including the industry, not the only individuals or SSE or only partnership firm, but whole corporate world whose incomes are affecting the SEBI regulations, who if they're listed company or RBI and a lot of other requirements. So with this, I think I have tried to narrate the scope and where money lies. Thank you very much. Thank you very much.
Thank you so much, Dr. R.K. Patel. You have given great insights into the various sections and the rules under which services of valuers, especially land and building valuers and plant and machinery valuers, are required. And we are now going to look at the Income Tax Act in new light as a source of new vertical which can give us additional income, as well as a new challenge which we have to master and show our expertise in this. Thank you so much. Now moving on to the last discussion of the day, before we take question and answers, I now request Dr. Nitin Lele, council member of IOV, to highlight the Form 169 and Form 170, which is of great significance to the valuers under the new regime. Over to Mr. Lele.
Yeah, good evening, namaskar, vanakkam. Thank you for Dr. Vinay, Goel and Mahendra for your wishful thinking to call me doctor. So I also thank Advocate Prakash Sinha and R.K. Patel, Dr. R.K. Patel, for giving very good insight. And I also thank Sohel Gupta, especially, who took pains to take up this series in continuation. So now with Dr. Patel's lecture, it is very clear that now we should forget the old regime and we should enter into new regime. So all the old sections this is the transition zone. So all the old sections to be converted to new sections, and you should be fastly able to recall it. Like uh, definition of capital asset. So earlier it was section 214. Now it is section 222. Definition of fair market value. It was section 222B. Now it is section 244. Or capital gains. They were section 45 to section 55. All were covering capital gains. So section 45 is now section 67. 48, 49, 50, they are 72. Our very loving section 50C, which was giving us work, it is now section 78. So all these things we have to now recall and remember fastly. And presently, we should not go into subsections, but at least sections, because for the transactions after 1/4/2026, that is already begun. We have to now write the new sections and not the old sections of the act. Even though for last financial year and this AY, the old sections were applicable, but now for this new regime after 1/4/26, we have to write the new sections. So accordingly, your report should validate those sections. Now we'll go to the form number 169 and 170. So application is under 246, and it mentions application should be in form 169. Let me share. Sohail, can you share from your end? So 169 is the application form under section 246. And what are the qualifications required? That is under section 247. So the 246 and 247, these are the two main sections, and 169 is the form of application. And how to do valuation, how to write valuation report, that is given in form 170. Let me check if I can share from my end. So can you share from your end?
Yes, sir, I'm sharing, sir.
Huh.
Is it visible, sir? Is it visible, sir?
Yeah. Just scroll it down. Scroll it down. Scroll it down. Come to form 169. Yeah. Slowly scroll it down. So in this form, it's very simple form. In the first part A, you have to fill the personal information like name, permanent account number, address, and birth date, contact details, mobile number, email ID, etc. But very important one thing, it is specifically mentioned that the name should be in full, no abbreviations. Like if my name is Nitin Madhusudan Lele, so I should not write NM Lele or something. I should write in full Nitin Madhusudan Lele. First name, father's name, family name, whatever is the system. That is the only important part in this. Then part B is a class of assets, whether it is plant or machinery, land and building, whatever is your class of asset. And part C is eligibility. So eligibility or qualification required, that is as per the section 247. For all the class of assets, they have given the required qualifications. Then we'll go to the interesting part of this form, that is grounds for disqualification. So if you observe this form, all questions are very simple and all answers should be no. Like whether you are employed under government or any other employer. So the answer is no. But there is a small note, refer note 6. And note 6 clearly states that if you are in employment with anybody, your application will be rejected. So you should be professional and not a employed person. That is note 6. So if you are employed somewhere and your answer is yes, then your application is disqualified. So have you been dismissed? No. Then this question number 3 and 4, these are important questions. Whether you are a valuer member of organization registered under Companies Act, that is RVO. Whether you are member of any RVO. So answer to this is this should be yes if you are a member of RVO. So I don't know whether if you write no, then you get disqualified or not, because it is not getting clear from this form that whether it is the selection criteria or they are collecting only for the information purposes. And further they have given you the space to write up to 100 words. So if you are a registered valuer, then you can write up to 100 words about your RVO, your registration number, since when you are registered and all that you can write in this. So this is the interesting area of this form. Rest of the form is just yes, no, have you been convicted, are you a minor, and all such sorts of questions. Scroll down, please. Scroll down. So scroll down, scroll down. Scroll down. Now we will scroll down unless you see something yellow. So yellow, yeah. Details of qualification of eligibility as a valuer shall be as per rule 247. That there they have given the qualification, and also the disqualification criteria are also given in 247. And also, even though I have not marked, read 6. No person shall qualify for registration as a valuer other than as a valuer of work of arts and virtual digital assets or other class of assets as may be specified by the board in this behalf, if he is employed under government or any other employer. So this is one of the keys to fill this form. Scroll down. Now let's go to form number 170. And this is for how to write the valuation report. Till now, the property valuers, they were writing the report in form O1. Now, we'll be writing the report in form 170 under rule 248. So, we have to look into few aspects of this form very carefully. Personal information about the assessee. Till date, we were not writing all these details. The name in full of the assessee, yes, we used to write. But his permanent account number, his local address, his contact details, his mobile number, that we never used to write. Now, in this form, this is a part A of the form, and here we will be writing it. Scroll down. Now, personal information of the valuer. Now, valuer who is registered under section 514, he has also give his personal information along with his name and permanent account number, contact details, STD number, mobile number. So these details also we have to fill in this form. Scroll down. Details of valuation reference. Now, valuation reference against which the report is being submitted. So this is also, I don't know area, whether we have to give the reference from our own office numbers, our own numbering method, or it should be VRN, since it demands your RVO and it speaks about the RVO. So we take VRN from the RVO and report here. That is a area which we'll have to find out sooner or later. Then for the class of assets to be valued, they say drop down. So it's most likely that it will be the online form or online report where we should complete the report, and at the end a submit button may come and we have to submit the report. So once we have reported, there will be no scope to change it. So we have to be very careful before we report. Scroll down, please. Now, these are the things which we usually do in our Form 01. The date of valuation, name of the owner, name of the co-owners. Scroll down. Share of each. Now, this is interesting part. Brief description description of the asset. It says upload and free text up to 500 words. 500 words is one page. Till date, we were just writing one-liner. It's a land and building or flat or office or educational institute or industry. So such a brief one-liner we were writing. Now it says free text up to 500 words. 500 words is one full page. So this is something different from our earlier form. Also, they have now asked latitude and longitude. It was also not there previously, even though we were reporting in part 2. But now it has come, latitude and longitude. Yes, very welcome change. Then type of assets. So there is a drop down. So this is an online form, complete online form, which I see. And you have to write, copy and paste the text here. Residential, commercial, and this is all right. The proximity to civil amenities like schools, hospitals, offices, market. So till now we were writing within 3 kilometers, within 5 kilometers, within 100 meters or whatsoever. But they say free text up to 500 words. So whenever you are visiting any property, you have to check whether all these amenities like schools, hospitals, offices, markets, cinemas, shopping malls, they are nearby or not. That you have to write up to 500 words, up to one full page. So that is what is the expectancy. So one full page for describing the property, one full page for the surrounding area. Now, land. The form till date was asking for documentary proof for shape, dimensions, and physical features. Now it says upload it. Not only down mention the area and say attach to the report. Now they say upload it. So it will be permanent feature and it should be readable. In lease also, in Form 01, they specifically mention refer note 1, full name without abbreviation. This is one specific change. And term of renewal of lease, it says upload the document, upload. So the lease agreement, you should not simply rely on the assessee or your client, but you should take the document from him, which needs to be uploaded. Scroll down. Then all the things which we were saying not applicable, not applicable, not applicable. Now we have to answer yes or no. And if there is a yes, for example, if there is any covenant, any restriction regarding the transfer, you have to upload the document. If there is easement, you have to upload the document. So they have given their emphasis on uploading the document. So later on, in case of dispute, all the papers will be with them. And later on, we and our client both should not change. The town planning, whether the land falls under any town planning scheme, relevant document should be uploaded. Contribution made towards the development, relevant document to be uploaded. So their insistence is on uploading all the details which we used to write only available, not available, or any number we used to write by this number, document number, this was done. Now we have to upload the document. Scroll down. Now, improvements, plans and elevations of the structure. So, you have to upload the plan, and technical details also, you have to upload the technical details. Scroll down. Now, valuation. Now, sale instance was a rare thing for many valuers. Only a few valuers used to provide instance of sale to arrive at the value. Now, in the form itself, they have given the how to write the sale instance, what they expect. So, name of the asset, address of the asset, registration number, sale price, and area of the land. So, all these things they expect you to write in the sale instance in the form. And you can repeat as required. That means you can give number of sale instances, not only one. So they give you the scope to have more sale instances. If sale instances are not available or not relied upon, many times property is sold at 100 rupees, actual market value is 100 rupees, and instance you get is 10 rupees. Then what can you do? You can do the valuation by some other method or some other way. But you have to explain it in up to 500 words and upload it. So how you have arrived at the value, that is the crux of the report. And that should be supported either by instance of sale or by writing a text of 500 words if you are not relying on instances of sales. Even construction cost, the work done, the contract agreement has to be uploaded. We can see in part E4. Scroll down. Scroll down, please. Then material rates and all. Now this was for the valuation of land and building. Now let's move to valuation of agriculture assets. I am not an agriculturist, not a registered valuer for agriculture, but I see the difference in the formats and forms. The brief description of the asset. Again, upload free text up to 500 words. Many parts of information are very similar to land and building. Then type of asset or land. It says there are drop downs. If it is a Negir land, Negir, I found out from the internet that it is a irrigated land, chubby land, irrigated by well, Banjar land and all. So what is the type of land that you have to choose and scroll down, and or otherwise you have to mention there. Then if it is falling in the town planning scheme, development plan and everything, then you have to upload, you have to write a text on it up to 500 words. So A, B, C, D, 500, 500. So 4-5 pages you have to write if they qualify under this. And there is a special note. Special features of the land such as quality and fertility of the land, mode of irrigation, etc. and means of transportation of the produce of the land to the market, whether cultivated by self or tenant. So all these details one has to give in the valuation report. Scroll down. Then E is important. Facilities and means of transportation of the produce of the land to the market. So you are a farmer, you are growing something, and you will be sending it to market. So how it will reach the market? So on that they expect one pager. Scroll down. Again, sale instances they are asking, few instances of sale. And if instances are not relied upon, similar to land and land valuation, if sale instances are not relied upon, then the basis of arriving at the value up to 500 words. Then scroll down now. We'll go to plant and machinery. Yeah. Now, very one important change. Earlier, we were calling plant and machinery. Now, in this format, they are calling machinery and plant. So it's exactly reverse. It's not plant and machinery now in this form. It is machinery and plant. Again, down brief description of the asset. So, what is machine? What are its features? What is extraordinary about it? What is ordinary about it? What is the age and power and many other things? Whatever you see and whatever that machine has, you have to write up to 500 words. So they say up to 500 words. So you have to limit your writing within 500 words. And again, approach to valuation. So in plant and machinery, there are no registered documents, but they expect some document to be provided for the basis for arriving at the value. Free text up to 1,000 words. So if you have no basis or you are using some other basis or something else, then you have provided 2 pages space to write how you arrived at the value. Scroll down. In jewelry section also, they expect to write a brief description of the asset up to 500 words. So these are all the major changes in form between form O1 and just up that yeah. In case of individual, first name, middle name, and last name shall be provided in full without any abbreviation. In any other case also, name should be provided in full. So I don't know why, but they are insisting on this. So maybe they are taking your PAN number also. So maybe some cross verification or something. But you have to write your name, address, what to write, how to write. They are given in the notes. So, and this annexure to form O1 and all that it is very similar to what we were doing previously. So that is all given in the technical details section. So that is the basic difference between form O1 and now form 170. So that's all from my end. Thank you very much.
Thank you, Nitin. It was great that you went into discussion of forms 169 and 170 in a very threadbare manner. And you have highlighted so many points, which brings out the difference between the old Form N as well as the new Form 170 and Form 01209. So that is quite nice. One very interesting highlight was that in Form 170, they have given various serial numbers, and in that serial number, they have given for the different categories, right? So it basically like only one form, but all different serial numbers give different categories. So if I am a land and building valuer, I will have to only take out only that portion and do my valuation. The rest of the portion I can give out. It is not necessary that I take an entire printout of all this forms 170 and write my report only in my portion and let the remaining pages be vacant. I mean unfilled. So it is just going to make my report appear big without any necessity. So a request will be to all the valuers to only take out those portions which are particular to your particular expertise and the valuation which you are doing. If you are doing for land and plant and machinery, take out only that portion and attach to the first part A and B, and then the rest of the things will be as per that. So that is great. I also thought that I would require, I would want Nitin to reply on this. I thought that this format of 170 seems to be much user friendly and seems to be much easier than O1 format. What do you think, Nitin?
Yeah, it's very comprehensive, I can say, because earlier in Form 01, it was just like yes, no, not applicable, not applicable, not applicable form. Now it specifies, right? Yes or no. And if there is any detailing, they have provided you text up to 500 words, 1000 words, like that.
Yeah.
So whatever is in your mind, or they have prompted you to where they want elaboration.
Yeah. I think there are many unnecessary fields. I think so. I'm not sure.
Yeah.
But it appears to me at first glance that many unnecessary fields have been removed, and all only contextually relevant fields have been kept. So that simplifies the whole thing. So if I take the first A and B part, which is first about introduction of the valuer,
But,
of the SSE, and then the valuer, and then the particular asset which you are doing, if you take those, I think it will be much easy.
It is making valuer responsible because it is giving space to write how you arrived at the value.
Yeah. So other than that, there have been some questions here that people are, we have made applications or we have submitted our applications, but the income tax office is not responding to our queries as to what is happening. Here, I would want to say that, don't be in a hurry. At the moment, let us wait. Let us wait till we get clarity. From the Form 169, as Nitin has said, as Vinay Sarji has said, and as Prakash Sinha sir has said, it seems to be an online form, but it is not at the moment available for us to fill in and submit. So just don't be in a hurry to fill the form and give physical copy to the income tax office and then wait for their reply. So at the moment, I would feel that all of us should bide our time. Once we get proper clarity, I think the institution of valuers and IOB RVF will make it known that the forms are now available and we can go about submitting them. At the moment, there is 6 months time for those of us who are under 34 AB. We have to submit our form within 6 months. So even 1 month has even not passed since 1st of April. So let us not be in a huge hurry. I think the income tax department is putting other urgent things into order first, and hopefully our form will be available online for filling it up within next 10 to 15 days. That is my thinking. I would now request the other panelists who are available still on the platform to put in there some parting remarks or some answers to the questions which they see they have been posted here. Yes, so Ali, please go ahead. Okay, if she is not available, then
am I audible, sir?
Yeah. Tell me.
Can we can take a question, sir, one by one with the faculties available in the chat section. I may take.
Yeah.
Prakash Sinha, sir, there is a one question. What does it mean that your performance shall be reviewed at the end of 3 years and registration shall be continued only if performance is found satisfactory? This is a clause in letter of registration as valuer issued by Income Tax Department.
Look, please appreciate how the law is there. Law is like he is delegating the function of a valuation to a very responsible professional, sir, like you here. Therefore, it is very much the law is expecting from you to comply all the provisions of the valuation here. In many organizations, we have seen that there is a peer review or the review provisions are there. They just go through your whatever the report that you have submitted here, and based on the report, they try to a preliminary examination that whether this report comply all the requirement of the law or not here. However, the valuation is depending upon the valuer, and they have to objectively follow all the provisions here. So the point which I'm trying to say, don't be scared about the review provisions. These are the administrative functions which the department has to take care in order to understand that whether this person is doing the valuation or not here. Like we have seen that, like what will happen now here? Like form number 169, form number 170. I understand that these forms will become an online forms here. When these forms will become an online forms here, you have to submit all the details on the online format here, whatever the valuation that is being done here. So my understanding is that it is just an administrative process that they will try to ensure that, yes, the person who is doing the valuation is right person or not person here. Like we have seen, for a lighter moment, I will take, we have seen the SIR which is going on in West Bengal or everything here. So they want to verify whether you are the valuer or correct valuer or not valuer here. They want to see that face here. Otherwise, how you can determine here? This is the just like a find out that yes, you are the right person. You have done the valuation, and for this purpose, like in any profession, peer review takes place. So it will take place here. Nothing to worry about that part here. It is an administrative function here.
I can see one question under
Yes,
32.
Lele sir, for
Yes,
you, it's if any valuer is under employment in a valuation firm, will he be not able to apply as valuer under IT Act?
yeah. If he's in employment, he cannot.
Okay, sir. Patel sir, one reason why IBBI valuer cannot undertake surface valuation as relevant act is not amended.
Yes, Surface Act is not amended yet, and then it specifically says that the 34 AB registered valuers are to be used under Surface Act. So they are to be used. Okay. When that now, if it is amended and that says that the income tax registered valuer is to be used, then it will be used. Okay. So and Surface is a separate act. Okay. So it has nothing to do with the Companies Act at this stage. Okay. Some of the companies' properties may be falling and subject to Surface, but Surface Act, as Prakash sir earlier said, that every act has its own objectives. Okay, so similarly, Surface Act has also its own objective and to protect the secured creditors. So I think there is no question of why IBBI registered valuers should be used under Surface Act, unless Surface Act amends and says that any other valuer can also be used as a valuer. Okay. Yeah.
Kakule sir, how to
Yeah.
check that our license under Wealth Tax Act is valid or not? There is no way to validate it generally.
Yeah, absolutely correct. For a person like me who got registered about 3 decades back, there is nothing in my registration certificate which the income tax gave me saying that my performance will be reviewed every 3 years, which they have started writing in the registration letters, granting registration later on in time. So for us old timers, it is so that we are just there as valuers, and then I don't know whether even the review is taking place. So far, I have not received any communication from the income tax authorities asking me to submit my certain requirements for them to review my performance or anything. So we just continue. But I am also told that in certain areas and certain geographies, they are insisting that valuers submit their whatever work they have done. The performance has to be reviewed every 3-4 years or 5 years, and then that is happening in certain geographies, which actually is good. Which actually is good, because certain valuers feel that there is no regulatory overarch over them, and they are free to do any nonsense they want. Just because people say, okay, you give me so much of valuation as of 1/4/2001, because after that I don't have to pay much tax. So just because of that, to just satisfy clients and get some fees, people may indulge in some wrong activities, because there is no regulatory overarch and there is no fear that he might be punished or he might be caught. So if there is a review, it is good for everyone, but unfortunately, it is not happening properly. Now it is definitely provided for in the new dispensation, the new things which are happening. Hope the income tax authority shows enough zest and zeal to work out, look at the performances of various valuers who are registered with them. Or as an alternative, they could ultimately, we are not sure, opt for the same arrangement as IBBI, where IBBI was the first, the apex regulator, and there were frontline regulators in form of RBOs. So we don't know what is the thinking on part of government. That can also happen. If that happens, then the performance could be reviewed and then put forth to the income tax department by these frontline regulators like RBOs, or maybe the RBOs themselves. We don't know. So we have to wait. We have to wait as to what happens now. But the provision is there. But in old times also this provision was there, but it was never implemented in many cases. So for a person like me who has not received any information so far about my performance and all that, I have to just assume that I'm a person whose license is valid, and then just make an application. If it is not valid, then they will tell me you pay 10,000 fees and go about it. So I will have to pay my 10,000 fees and go about it, or I have to fight with them. Why you are saying this?
Okay, sir. Prakash sir, under 34AB, architects were registered even though they employed as a professional. What about in new act?
No, they were not. Even anybody who is under is working cannot be.
Please appreciate here.
Yeah. Sir, section 247, it is very clear. As a professor, reader,
In college.
lecturer in university, college, or any other institution, preparing student in engineering or architecture or town planning, or for qualifying referred to in clause A, must have retired or resigned from the employment after having taught for not less than 10 years. Oh. So he has to retire or resign. Then only he will be eligible. Otherwise, he's not eligible.
Please appreciate that while their registration is taking place, you are entering a contract with the income tax department here. So all the provisions of the Contract Act means you should be a person who is eligible to enter into a valid contract should be there. If you are an employment here, then therefore how you are not an eligible person, like you are a minor, like you are a lunatic person, there is some basic disqualification that is there attached with this part here. You cannot have some dual function here. Apart from the employment also, you can be a professional also. Both cannot be there simultaneously here. So therefore, there is a inherent, these are the inherent limitation attached with any person who wants to undertake any professional assignment here, that he must be an independent. The first part is that independent here. The moment he is an unemployment, his independence is getting breached here, and therefore the law has in explicit term has said that you people are not entitled to make an application for the purpose of getting registered as a registered valuation here. So therefore, whenever we read any provisions here, try to go back into this. What is the basic provision which they are trying to mention? It is simplicity mentioned here. Even though it was not mentioned, the condition would have applied. Even though they would have not mentioned here, the condition would have been applied. So they're making it only, they are making it explicit here, nothing more than that part here.
Okay, sir. Nitin, sir, if someone has surrendered their RVO membership, so what they should write in the membership criteria, yes or no? Or should they activate their membership for this thing if they are not working, having any valuation under Companies Act?
If they are registered members, then if they have not resigned or if they are not opted out, if they are not out of this profession, then they should write no. If they are regular members, then only they can write yes. Am I right, Patel sir?
Yes, yes, you are right.
Okay,
Membership is there, you have to mention, yeah.
Yeah. So the present status is very important. What is your present status? If presently there are people who have not paid for 4-5 years.
No, they have to keep
With
on
this
paying.
upcoming act, they have a feeling that if they are members of RVO, then they have a chance of again getting registered under Income Tax Act.
Nitin, sir, one is at the time of application and second is at the time of regular interval, the review or performance, what somebody asked and then our Prakash sir nicely explained performance. Okay, I think they have to keep membership live, correct? Otherwise, they are not fit and proper.
My submission is at the moment it is not see, the draft rules were something different and what has come out is different. At the moment, it does not seem to me that it is necessary that a person should be a valuer under Companies Act registered with IBBI or a member of any RVO.
Yes.
You have other qualifications which are there as per Rule 246, and then you fulfill the criteria irrespective of whether you are a member of RVO or you have passed your IBBI examination. Irrespective of that, you can qualify to be a registered valuer.
Yeah.
Now, we don't know what is going to happen in future. In the draft rules, they had said that the name of the person would have to be, he should be a valuer member of RVO, and his name would have to be recommended by the RVO for registration. That is what that was said. That clause has been now removed from the rules notified. So it is not necessary that a person has to be IBBI passed examination,
No.
registered person, and he should be a member of any RVO. It is not
necessary.
It is not necessary. He can still become a member, I mean, a registered valuer under Income Tax.
Yes.
Mahendra, there is a fear with some valuers that they are 34 AB as well as IBBI registered. Okay. But now they are not getting work under IBBI. So number of them, they are not paying the fees and they are discontinuing. And now suddenly this hope has come that if they are registered with IBBI, they may get direct registration or they may skip the examination. With these two fear factors, this question comes up.
Yeah, so my submission is there is provision under IBBI this things scheme of things for registration of valuers that if a person wants to surrender his license to practice, he can do it by making an application to IBBI saying that he wants to surrender his registration for a certain period. After that certain period, if he wants to reactivate it, there is provision to reactivate it. So if people have done this, necessary thing, like, they have surrendered, and if they now want to reactivate it, there is provision, in my opinion, under the scheme of things under registered valuers under IBBI. So that is provided. Now, what people might have done, they have not surrendered and they are not paying fees. So there they are finding themselves in a difficult situation. In that case, they will have to, I think, pay all the remaining fees and then in case.
Mahendra, question of Nitin Lele is little additional also. What he says that the one person is registered under 34 IBBI and he is not getting the work. Okay, getting the work is a different kind of quality the valuer has to show, no?
Yeah.
He has to, I think, pretend himself that he is the good valuer to do the valuations as per the registration got under IBBI, correct? He has
Yes.
to explore himself, no? He has to explore various market areas, and then, as I have explained in our today's sections and rules, okay, there is ample scope for the valuers registered under Income Tax Act, okay? I think we have to find out the scope ourselves, correct? And we have to expand our scope. So I think not getting the work is not an excuse, okay?
Yeah, yeah.
University gives the degree, not the employment.
Correct.
So this,
Agree with you, sir. Agree with you.
yeah.
Lele sir, in form number 170, I have seen out the purpose of valuation.
Huh. Yeah, purpose of valuation can be capital gain, or it
Cost
can
of
be
construction.
fair market value, or cost of construction, or like our section 43 CA, which is full value of consideration, or section old section 50C, which is now 78, which is consideration less than the government value. So these are the purposes of valuation under Income
Absolutely.
Tax Act. If it is capital gain, it is 1/4/2001 valuation. So these are the purposes of valuation.
Okay, sir. Kakule sir, over to you, sir. Any concluding remarks?
No, I think it has been very a session which has brought in a lot of insights and given, I think, a lot of confidence to the people who have participated. It shows us that we are at the moment on the right path, and there is no need to be in a huge haste and do something which we really will regret later. So let us not jump the gun. Let us bide our time. There is ample time for those who are already under 34AB. Those who want to get fresh valuation under 514, maybe you have to show a bit of a patience till the things get clarified, and then we go about it. So I think everything is fine. There is nothing to panic. That is my thinking. Any other comments by other panelists?
I will like to make one thing here clear here. Many people have seen that they have asked the question of form number 85 with the form number 169 here. I feel that is the form here. Form number 85 with the form number 169, which is application form for the purpose of getting valuation registered. Both operate in a different parameter. Both has some different set of requirement. Don't get confused with the form number 85. Form number 85 is for the special purpose when you try to get registered as a valuer for the purpose of search and seizure matter, nothing more than that. In the case of in the case of 169, you are getting registered as a valuer for all other purpose which are there. Then the issue arises here. If suppose that if you are registered as a under 514, are you required to register under the 85 for the purpose of search and seizure? The answer will be yes. The second, they could take another part here. If you are registered under the 85, are you said to be registered under the valuer officer? Answer will be no. So, because the 85 scope is something different, 85 scope is something much wider. It says that any person, entity, or the valuation officer, or the registered valuer. So there are four terms that has been used here. However, section 514 is the only qua the registered valuer. So 169 is qua the registered valuer only. However, the form 85 is that for other persons which is coming from the 245 and 247.5 and 247.9. These are the few that this was here. Second thing I would like to clarify that there is no timeline for the purpose of examination. Timeline, they have said that if you see that 246.6, it says that where a person is registered as a valuer under section 514, he is required to qualify an examination within a period as may be specified in this behalf by the central government by notification. So does not prescribe any timeline. 246.6 does not prescribe the timeline. It is for the purpose of registration, there is a timeline is there. So for the purpose of examination by the department, there is no timeline there. There is no timeline is mentioned. So please be assured here. So the 6-month period is not applicable qua the 246.6. The 6-month period is applicable qua the 246.4 only, not the 246.6 here.
Okay, a small observation of mine, which I will state here. Please give me your feedback, the other panelists. If we look at Form 85, as we discussed just now, previously it was under Section 132. I don't remember what form it was, but previously this section was under search and seizure, if I am not mistaken, was I think 132. So those of us who are registered under this particular section, search and seizure, under the previous regime of the Income Tax Act 1961, they need not make a fresh application under 2025 because we already are under Income Tax Act only. Here the question arises, sir, let me finish. Here the question arises as far as 514 is concerned because it was under Wealth Tax Act. So when they say about 514, they are transitioning from, and they have clearly stated, from Wealth Tax Act to the Income Tax Act. But when it comes to search and seizure, if I have got my permission under search and seizure in the previous Income Tax Act 1961, it is under the Act itself. So I'm from the reading of the whole thing, I am pretty sure that I was not required to make a fresh application under Section 2025. I mean, under the new Income Tax Act 2025. So I would want you people to give me clarity on this, whether such a new application is really required and where it is stated. And where it is stated that those under 132 previously have to make a fresh application under Form 85, where it is stated so.
I will like to answer this part.
Yes, sir. Please.
If you read the 246 here, or if you go to the section 514 here, sorry. (514) talks about the registration part here. Okay. And you go to the 246, which provides the qualification qua the registration here. When you see that the purpose of 246 is something different, which I'm again stressing that part. The purpose of section rule 149 is something different. The 85 number form or the search and seizure is coming through the search and seizure, which was there into the form number 85, which is coming through the form 85 rule 149. If you see that part here, 246 here, what does 246? An application for the registration for the valuation on 5142 shall be made in form 169 and shall be verified here. Now come to the person which is coming to the this one say 4 here, where a person is already registered as a valuer under Wealth Tax Act 1957. So the only leeway is giving to those person who are registered as a valuer as under 514 under the Wealth Tax Act. This does not prescribe the person who are registered under the erstwhile 132 also. So my understanding, or you can say my limited understanding, that both 132, that is the search and seizure provision, which is right now 247 right now, works on a different perspective here.
No, I agree with you, sir. But my only saying is, if I am already registered under 132 as per 1961, do I have to make a new application under search and seizure under Form 85 now? I don't think it is required. That is what my question is. Because I am already under 132, previously registered under 1961 Act. I'm already there. So is there any reason for me to make a fresh application under Form 85 is my question to you. Under the
Mahendra, I can answer. I think I participated in hundreds of search seizure operations.
Yeah.
The kind of knowledge required in search seizure operation is very much different than kind of work we do for valuation, like capital gain and all.
Yeah, agreed.
We do homework and all. in search and seizure operation, on the spot, you have to suggest something to the person in charge or income tax commissioner that this asset would be around 5 crores, 2 crores, something you have to suggest there and there only. And it comes many a times, it is a cost of construction and a cost of interiors. So it needs a fresh knowledge. And many times the person who reaches there, he is unable to do that work. So maybe this thing has come up. Earlier, they used to give us commission under section 131 1D, where the assessing officer or commissioner was empowered to give commission to experts like us. And the powers of civil courts were vested in us when we
No,
go
that
such action.
that is different.
So
Nitin.
it's
My question to you, Nitin, is
specialized knowledge, I can say.
yeah. My question to you is that since you are already registered under 132, because you participate in search and seizure operations, you said,
Yes.
so you are already registered under 132. Do you now have to make a fresh application under 247 under section under Form 85? I don't think it is mentioned anywhere.
What they will do is they will interview a person, whether he is
Fresh interview they will conduct.
updated or afresh. His knowledge is suitable for search and seizure
No, but is
or not.
this mentioned anywhere in the rules? No.
If you see the 149, if you see the 149,
yes, sir. Tell me.
kindly go through the 149, 149.3, 149.3.
Okay.
It talks about the application referred to in sub-rule 1 shall be made in the form number 85.
Okay.
So everyone has to make an application in the form number 85.
Yeah, but those who are already previously under search and seizure under previous regime, do they have to make a fresh one?
There is no exclusion, sir. There is no exclusion here. There is no specific exclusion here.
Is it like
how
that?
we can? How we can assume the exclusion here? In my understanding, there is no explicit exclusion.
Okay. So that means to all those who are on this particular platform, if you have got registration under 132 in the as per Income Tax Act 1961, you have to make a fresh application under Form 85 under the new section 247. That is the meaning of it.
Just go through the 85 also. If you find that, go to the 85 also. Just find out whether they have said that anywhere earlier that you were registered. You have to give simplicity the registration detail also.
Yeah.
So they are not
given.
So
not given.
So they are not excluding you, saying that since you were registered here.
Yeah. So my only request is, the institution, our institution of valuers could, find out more about this from the concerned department, the income tax authority, and then accordingly let us look into this. And I think they have not given any timeline that you have to do it within 6 months or anything like that. So there is no question of being stressed out on this or anything. So if it is required to be done, let us do it.
Point number 6 in this form, it says I hereby apply for the service under section 247(5) or 247(9). So what is 247(5) and 9? Let's find out.
That is 247. That is basically one is reference and one is requisition. One is requisition by the authority and one is reference by the authorities. That is, I think that would be that.
That is only that part. This means in the 247(9), when there is a requisition by the department, you have to go there. You have to go there for the purpose of providing the services. In the case of 5, you have to be present in the search places here.
Yeah. Otherwise, that could be just a reference. So that will be the 9 part. Anyways, thanks for all these inputs. This is a great help. Let us get more clarity as far as this Form 85 is concerned. As far as the 514 is concerned, let us not be, in a state of panic, and then go about doing our work in a very peaceful state of mind. Things will work out. Everything will work out for the good. Let us be there with presence of mind and act as and when required to. So with these words, I conclude. I request Sohali to, conclude this session. And thanks a lot to all the participants who have participated in large numbers and made today's discussion so fruitful and important to all of us. Thank you so much. A big thank you to all the panelists also. Thank you so much.
Thank you so much, sir. Thank you so much for with us. Thank you so much all the panelists, faculties, sorry,
Yeah.
for being with us and for taking the session. And I request all the delegates who are not satisfied with the answers or having more questions, you can send it us on the mail ID, that is pro@iov.co.in, and we'll take all such questions in the next or upcoming sessions as soon as the more notifications or more clarity come into the picture. Thank
Thank
you
you
all.
so much. Bye.
Thanks a lot.
Thank you.